Loan officers, you're going to love today's episode. Realtors, you're going to learn a thing or two because this is a lender's take on what you should know about lending if you were to become a real estate agent. Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and my main man,
JC
John Coleman.
Yo, what is poppin' today?
John, I'm excited for today's episode. Today's episode is actually a lunch and learn that back in the day I used to teach to the real estate community.
Shout out Lunch and Learns.
Shout out to Lunch and Learns. And it's essentially like everything that I learned by being a lender. If I were to switch careers and become a real estate agent, like these are the 5 things that I would want to know. Or if I were to ever open up my own real estate agency and I was in charge of hiring and training realtors, this is what I'd want those realtors to know. And it's coming from my 2+ decades experience of being a mortgage lender. Yeah, very similar. Loan officers and realtors. We have something else that we're going to be doing that is geared specifically for both of you all. Here we are, we're in September. So we are a month to a month and a half post the new rules due to the NAR commission settlement lawsuit, right? The lawsuit settlement.
Yeah.
Okay, so it's like the new world post NAR is kind of what we're calling it. So here at TLOP, we are going to do a exclusive webinar. And we say exclusive, it means because it's exclusively for those people who tune into the show, that subscribe to our YouTube channel, that have signed up for our newsletter, which there's your reminder. If you haven't subscribed to our YouTube channel, please go to YouTube and subscribe. It's a badass channel with loads of content, not just a place where you can watch the podcast. And if you haven't signed up for our newsletter, go to TLOP Online and sign up for our newsletter. I write that shit. It comes out every single week on Thursday. And it's also your free invitation to all of the events that we do. So a TLOP exclusive is for people who tune into the show, subscribe to the YouTube channel. Maybe they're coached by us. Maybe they just sign up for the newsletter. Who knows? But they are a TLOPer than the TLOP sphere, we'll call it. Well, on September 26th, we're going to be doing a webinar. And here's what we did. I went out and found 2 top producing loan officers. So I have Andy Zeman with Novus Home Loans out of Charlottesville, Virginia. And Andy's going to be tagging along one of his top realtor referral partners. And then I have Kayla Callender up in Fargo, North Dakota. And Kayla's going to be bringing along with her one of her top realtor referral partners. And collectively, I'm going to moderate a panel with Kayla and her realtor partner, Andy and his realtor partner, where we're going to ask them what's working in their market. What are they seeing since the NAR commission settlement new rules went into effect? What are some best practices? What are some gotcha moments? And what are some ways that we as professionals can continue to thrive in this new world? And this is your invitation to go to our website, tloponline.com. And if you scroll down about halfway through the main page, you'll be able to register for this free event. Loan officers, it's for you, but it's also for your realtors. So be sure that you forward it along to all of your realtor partners or those realtors that you're trying to connect with, because our goal is to bring value to both real estate and the mortgage community.
Well said, Dustin. That's why I did not interrupt you.
We still keep on getting sidetracked. Let's jump into today's content.
That's fine. Okay. It's all going to be you talking. I'm going to phase out.
You're going to ask questions.
Okay, Dustin. What should realtors know? I'm a new loan officer. I need to educate my realtor partners because they're ignorant and oblivious to what I do. How can I help educate them so they treat me with more dignity and respect and we can close more deals together?
I mean, it's kind of like that, John, right? Not quite like that, because there's very experienced agents out there that are going to love learning these 5 things. Like, these are the 5 things that if I were to become a realtor or opened up my own brokerage, I would make sure every agent knew when it comes to being really good and understanding finance. Because I don't want my realtors to know how to calculate DTI, how to calculate income, what is residual income on a VA loan, and the difference between FHA has upfront mortgage insurance and conventional doesn't. Like, I don't think you have to be proficient there. I think that's where you have a great lender and you trust that lender to do their job really well so you can know your job really well, the school neighborhoods and probation of taxes and title and every other thing you need to know if you're a realtor, right? So my 5 are both real. They're a little bit funny, but it is what I would teach. So first and foremost, if and when you hear the word condo, and this has been relevant and true for 2 decades, take a step back, take a deep breath, and make sure that that buyer is talking to a lender that truly understands condo financing. I mean, I don't care if this is 2004, 2014, or 2024, it still applies. Condos or condominiums are a very difficult property type to finance when compared to a single family home. And the reason why is because we're not just qualifying the buyer, we're actually qualifying the condominium association as well, because that is our collateral, and that association has a lot of power. They have a lot of responsibility. So there are distinct requirements to get a condo project approved. And if the condo project isn't approved, it doesn't mean it's not financeable. It just means it might not be financeable for the greatest amount of financing options. You may have to put more money down. You may have to take a higher interest rate, because condos are deemed warrantable and non-warrantable, and some are deemed condotels. And a warrantable condo is the easiest to finance. A non-warrantable condo makes it more difficult, and a condotel is even more difficult than that. So if I'm a real estate agent, you don't necessarily need to truly understand warrantable, non-warrantable condotel. Just know when you hear the word condo, you take a deep breath, you take a step back, and you mandate that your buyer or prospective buyer talks to a lender that knows what the hell they're talking about, because your lender should know the difference between a warrantable condo, a non-warrantable condo, a condotel. They should know the difference between a PERS approval, a CPM, or a limited review, and what it takes to get a limited review versus a CPM versus a PERS, et cetera, right? DELRAP, if we're talking about FHA, there's a lot of things that go on with condo financing that it doesn't matter how strong and solid the home buyer is. 800 credit score, $1 million in the bank to make $1 million a year. But if the condominium project is not approvable, then your financing options are going to be limited, or those that are available may require a large down payment and worse terms. By worse terms, I mean you may be paying more points up front, or you may be taking a higher interest rate. So the first thing I would say is, you hear the word condo, take a deep breath, take a step back, and make sure that your buyer is talking to someone that knows what they're doing.
I have a question.
Yes.
If condos are so goddamn hard to finance, why are they always going up in every major city 55 stories tall? Who is buying this shit, and who can afford that if it's so hard to finance?
I mean, you have a lot of cash buyers out there, right? 1 in 4 transactions are cash buyers.
Really?
Yeah, but then if you think about who buys condos, if they're retirees because they live in Florida, right? They may be selling their home up in Masshole or New Hampshire,
right,
and they're selling that home for $900,000. They're buying the condo for $650,000, and they're just paying cash for it.
Bro,
so
these condos are going up every other minute, even in downtown Orlando. I'm like, who? How?
And are they condos or are they apartments?
Condos that are apartments.
Well, no. And that's one of my biggest pet peeves. And we get it from people from the Northeast, New York, New Jersey. I'm talking to you. They always come down to Florida. I want to buy an apartment. I'm like, bitch, we don't finance apartments. We don't. We finance condos. We finance co-ops, townhomes. An apartment to me means you're wanting to finance the entire apartment complex because you're the next Grant Cardone.
Give me the building.
Correct. We don't use those words. That definitely lets me know, hey, this is a person who's newer at this game called real estate. Let me educate them that we don't finance apartments. You rent apartments, John. You can go be a renter. So when you're talking about things are going up, you may be talking about affordable housing. Multi-unit housing is going up because we have population growth and we have household formation growth, and these people have to live somewhere. But they might not be condos that you're purchasing a unit. They just may be apartments that you're spending $3,000 a month to rent. So realtors, you should know that. First and foremost, you hear the word condo. Now, here's going to be a funny one.
Okay.
And please don't kill the messenger. It's funny. Okay. It's meant to be a bit of a parody. It's a generalization.
Usually if it's a parody or a joke, it's 100% true. So.
All right. If the person you're dealing with has in their email signature or in their voice message, have a blessed day, take a deep breath, take a step back. There's a good chance their credit's below average or poor. They have Jesus. They don't need to necessarily have good credit.
Amen.
Yes. And that's always a funny ism. It actually is more true than not. And I don't have a good reason as
they
to
don't got
why.
no money because they tithe that shit.
Maybe that's the case. I have no idea. But I have found that when I get to leave someone a voicemail and they tell me to have a blessed day, or on their email signature it talks about having a blessed day, that 4 times out of 5 or 8 times out of 10, there's a good chance that they may also have bruised or impaired credit.
So translation: if they say have a blessed day, that means take them out of your CRM and drip campaign.
Not necessarily. It means that within your drip campaign in your CRM, you had them designated to get the right collateral, and you've pointed them into the right direction of maybe a credit counselor or a credit repair agency, or maybe even walk them through how to better track their finances and how to save while also making their bill payments on time.
Shout out ADM if you're looking for a good CRM.
There we go. Shout out to our friends ADM. I like that one, John. All right, so that's a little bit of a funny one. This third one, I'm going to fall very similar to condos.
Oh, that was number 2. Number 2
That was number 2. If they have a blessed day. If they have, I told you some of these are going to be like.
Yeah, right. But you didn't throw that in with the Hummer because nobody drives.
I'm not there yet.
No,
you just blew it.
No, because you usually lump those together. I've been with you for quite a while, Dustin, and usually the email signature and Hummer story go together.
Yeah, but what if I needed a 5th one, John? And
No,
now you're going to make me on the spot.
Those are 2 throwaways that you lump together to make one. We all know that.
What if I did a reel, a throwaway, a real one, a throwaway, and then I was going to end on a real one? Now I have to come up with another throwaway. All right, so John spoiled it. All right, and you are right. Less people drive Hummers than they do today.
Yeah.
But you know what they may drive? I don't know, maybe a Tesla truck.
Oh, have you seen one?
I have not, but I also haven't been able to profile the people who drive Tesla trucks. So it's not fair to say.
Well, do you know people who drive Teslas? Wow.
Yes, I do.
No, you had to think.
I do.
Who?
No, I started naming the people. 2 people that I work out with at the Tri Club drive Teslas. They're good people.
You'd work out with them, but you wouldn't invite them over for dinner.
Oh, I would. Yeah, I would. My wife almost bought a Tesla.
What the fuck? Are you serious?
Yeah, we test drove
that
one.
Would be completely different. That would have changed your whole family dynamic.
No, but instead she went with the Acura MDX over the Tesla. But
if you guys bought a Tesla, you would start dressing in all black like Steve Jobs with fucking turtlenecks in the summer.
How about, speaking of all black, dude, the number of mid 40, early 50-year-old dudes that get together wearing jeans, J's, and a black T-shirt.
Now I have to wear something different like Asics because y'all motherfuckers ruined my J swag.
I mean, but like literally, I'm like, is there some kind of a template? Like, hey, and by the way, the black hat backwards.
Yes,
mandatory. Like, I'm going to be the next social media superstar. I got to wear my black hat backwards.
I'm a content creator and join my coaching program only until, that's like a rite of passage, Dustin. You can't tell people what to do on YouTube with fancy backgrounds and a good camera unless you have a black hat that's backwards with a black shirt that has nothing on it.
Yeah, there are so many. Is that like his black is slimming? Is that because
they just look? That's the look.
Because Gary Vee said so.
Because people are like monkey see, monkey do, and then Steve Jobs did it. So I'm like Steve Jobs. I'm a fucking genius.
I mean, don't get me wrong. Look, at the end of the day, we do teach to follow the patterns of success.
I mean, I have been wearing all black for the past like 20 episodes. So
there you go, John. Maybe that's why we're really starting to take off. You know, we started from the bottom, now we're here.
Follow the patterns of success. You want to wear those, what do you call those things? I used to wear them all the time when I started working. The fancy shoes.
Boosters?
Not Doc Martens. What the fuck are those light shoes called?
On Clouds?
No. Oh, my God.
Yeezys?
No. What are those light shoes that everybody has that were cool? Cole Haans. You got to have the Cole Haans with the Docker khakis with a belt with like the kind of golf hoodie shirt tucked in with like the collared shirt.
I mean, look, you are talking to I am every stereotype that's out there, right? So as I rock my slip-on shoes with no socks, my Lulu pants, and either a polo or a white button-down, because that's what I'm rocking today. Like, yeah, just go ahead and put me up there and call me a boomer and make fun of me. I don't care.
I want my next CEO to be 10:30 in the morning, reeking of alcohol, looking like he didn't go to sleep, and then be like, "You're my idol."
You don't.
Yes, I do.
That company would be a train wreck.
It'd be a fun company to work for.
Yeah. Well, I would tell you this: lower CEO Dan Snyder. I don't think I've ever seen Dan wear something with buttons on it. Right? He's slacks or jeans. He's shoes and a T-shirt.
Let's get him on the crap table one of these days.
On the craps table?
Yeah.
Man. That'd be a good time.
Teeth out.
No, teeth in. Teeth in for that one. Teeth out is so in my 30s. I'm now in my 40s, John. We don't do that shit. Now, you can still get me on a karaoke machine
Oh yeah,
doing some too short.
Yes, that is true.
You 100% can get that going, but no, teeth out is so 1999.
Yeah, right.
It is so 1999.
Okay.
That's so 1900s. All right.
Yeah.
So as John was alluding to, he kind of ruined it, but on the same parallel,
yes,
as if they say have a blessed day, it used to be if they drive a Hummer, they can't prove their income.
That's true.
Now, I need to find a new vehicle because Hummers aren't as prevalent.
Teslas.
I think they can prove their income. I think they can. The two people I can think about, they can prove their income.
Right.
But there is some vehicle out there. I would love for people to drop a comment in the YouTube channel.
Probably Ford F-150s, the ones that are jacked up with the big rims and tires.
Oh, how about in the lights in the wheels?
Jesus, yeah.
If you have lights in your wheels and you can't prove your income.
Hey, shout out people who live at Horsepower Ranch. If you know, you know.
Okay.
If you know,
but it
you know.
used to be if you drive a Hummer, look, if that home buyer rolls in to your open house, or they roll in to do their consultation, and they're driving a Hummer, man, they can't prove their income.
There's nothing I can do for you.
All right. So the third thing, speaking of not being able to prove their income,
okay,
I will tell all of y'all this: those people whose clients are realtors, or you yourself are looking to become a realtor, or you are a realtor. If you don't know this already, like, let me be the first to warn you and educate you. When you have a home buyer who is self-employed, slow your roll, take a deep breath, and take a step back. It is imperative when you're working with a self-employed client that they are talking to a lender that you know, you like, you trust, that is local and accountable to you, and they know what they're doing. Because at the end of the day, people who are self-employed, unlike people who are W-2'd and work for someone else, they can and will look for every tax loophole to avoid paying taxes, like, talking income taxes. But because of that, they're not going to have enough income to necessarily qualify for the type of loan they originally thought they wanted to. Now, the good news is, and we've done plenty of episodes with some of our non-QM lender friends, right? We had Quantic, we had Angel Oak just recently. So there are things called bank statement loans out there, or DSCR loans out there, that have alternative forms of documenting income. But those particular loans may require a larger down payment than your home buyer was anticipating. They may come with an interest rate slightly higher than what your home buyer was anticipating. So I think it's imperative when that person rolls up, they could be rolling in a Tesla truck. They could be rolling in a $100,000 Audi A8. But it doesn't mean they can necessarily prove their income and they're going to qualify for that conventional loan with 10% down, for that VA loan with no money down, right? Like, they may have a hard time qualifying for their income. So it's imperative, don't get wowed by the clothes they're wearing. Don't get wowed by the car they're driving. There is a good chance that they can't prove their income. Cool. Similar, if we're going to throw a stereotype out there, like, here's two things that I have learned. An attorney, for whatever reason, as a profession, lets me know that there's a good chance their credit is average and not great. And I've also learned that when it comes to doctors are phenomenal at medicine. Right? The same way that I get icked out, like, ooh, gross needles, ooh, gross blood, which I do, by the way. I almost passed out in Mr. Harsh's 12th grade anatomy class watching on VHS tape a facelift and a cesarean section, right? Like a C-section.
Can you believe some of the shit they showed us growing up?
I dug it, but I almost like passed out just watching it. So that same ick feeling that a lot of us, me included, get when it comes to like drawing blood or needles or cutting people open, doctors do that shit like no big deal. But you know what icks out doctors? Money, personal finance.
Yeah.
Yes, and the number of doctors that I have encountered as a professional in the finance world, helping them acquire real estate and using financing. And I'm like, bro, how your credit should not be a 660. But they made these decisions that
I save lives, not money, Dustin. Get off my lawn.
It's it's maxed out credit cards. It's overextension. It's missing payments, and not because they didn't have the money, just because they were disorganized.
Well, as soon as we can start charging, we can buy drugs with our charge card, Dustin. I'm sure that'll change. But until then, cash is king.
Is that what it is?
Yes.
Okay. I'm going to trust you on that one, John. Yes. Whatever you said, I'm going to trust you on that one.
I like how you said whatever you said.
Whatever you said, I'll trust you on that one. But and those aren't the 5 things that you would want to know. But those are, just, hey, look, sidebar. Like when I'm personality profiling and I'm doing so on a professional assessment, attorneys don't have the best credit because sometimes they just know better. Sometimes they're just smarter than everyone else.
Everyone in the room.
And they don't have to pay that because there's somewhere in the agreement that blah, blah, blah. I'm like, cool, bro, but you just wrecked your credit by being righteous. Right. You just wrecked your credit by being a know-it-all. Where doctors, it's less about that. It's just like, they're icked out by it. They can't be bothered and they don't put as much focus into that. Or they're working 100 hours a week and they forgot they had that bill. And if they would have remembered they had it, they had the money to pay it. They just didn't get a chance to do so. So we covered the number 1 thing was condos. Number 1 thing was have a blessed day. Number 3 thing was people who are self-employed. All right, so we need to come up with number 4 and number 5. Mm-hmm. And number 4 is less about profiling types of transactions. And it's more of finding a way to address someone who's getting ready to purchase a home without offending them. Because I need to build rapport. I need these people to like me because ultimately I understand as a real estate agent, people do business with people, right? That's the saying. People do business with people they know, like, and trust. I need them to get to know me so they can like me and eventually trust me. So I need to find a way to meet John Coleman for the first time and not offend him because I profiled him for the shoes he was wearing or the hoodie he was wearing or the car that he rolled up in. And I don't want to say to John, well, John, are you pre-approved yet? And what if John's a cash buyer? And I sure as heck don't also want to profile someone and be like, hey, so are you paying cash? And now I just make them feel bad about themselves because they're like, no, I need to get a loan. So what I loved as a real estate agent to ask any prospective home buyer up front, and this would be the 4th thing I would teach a realtor, is a proper way to ask someone about how they're going to afford the house without offending either side of the coin. So I would ask it this way. I'm like, hey, John, out of curiosity, are you looking to pay cash for this transaction or do you want to take advantage of financing? Just like that. So now I don't have to guess, is John going to be a cash buyer? Is John going to need financing? I don't want to offend the guy paying cash by assuming they need a loan. And I don't want to make the person who needs a loan feel bad about themselves that they can't pay cash. So the 4th thing that I would teach to that real estate agent that was coming to work for my fake real estate brokerage, knowing what I know by being a lender, it would be how to ask that question. And I'd want to ask that question up front. And I'd want to also explain to them why it matters. So I'd first start by saying, hey, John, out of curiosity, are you going to be paying cash for this home purchase or do you want to take advantage of the financing options? And you would answer it as?
I would like to take advantage of the financing options.
Awesome. Okay, so here's one of the first steps you're going to have to take is you're going to have to get pre-approved for financing. And the reason why you have to get pre-approved for financing is because in today's day and age, sellers won't let us into their home and they won't let us make an offer unless they know that you're a serious person who can qualify for financing. So the first step is get all your questions answered, get your proper financial plan put in place, and more importantly, get that pre-approval letter. Do you have a lender that you already know and trust, or would you like a recommendation? That's exactly how I would ask it. Do you have a lender that you already know and trust, or would you like a recommendation? And you would answer it.
I probably need a recommendation.
Perfect. I'm going to recommend you someone who I've worked with in the past. I like them because I trust them to be accountable to you and I. They're going to communicate effectively to you. And more importantly, they understand there's no such thing as a one-size-fits-all mortgage. They will answer all your questions and help you decide which loan program's best for you. And when we need them throughout the process, I trust they're going to be there for us to answer our questions and to communicate effectively. And I'm going to give the recommendation. Had John said to me, nope, I already have someone, I'm like, oh, that's awesome. Have you worked with them in the past? I'm not going to just be like, as a realtor, oh, cool, John has someone. Check that box and move on. No, I need to make sure that he's actually worked with them in the past. Are they accountable? Are they trustworthy? Are they going to communicate? And then if they're not, or John doesn't know those answers, I, as the real estate agent, need to let John know the importance of having a lender that is going to do all of those things, Because at the end of the day, as a realtor, my paycheck is on the line. I'm going to spend a lot of hours with John, with his family, trying to get him under contract. Mm-hmm. And if the loan doesn't close, that means the transaction doesn't fund. That means I don't get paid. So I, as a realtor, need to make sure I ask the right questions in the right manner. And I do so in a way that I'm an educator, and I explain to John the why. Why is it important to have a good lender that's going to be accountable to me, et cetera, et cetera. Or I need to be able to refer him to one and explain to him why I'm referring that particular lender and why it's important that we work with that caliber of a lender. Now, if John said to me, nope, I'm going to pay cash, that is fantastic. Hey, look, in today's market, when you're purchasing real estate, even as a cash offer, the seller is going to want to see that you have the funds available, because unfortunately, there's been too many people that say they're going to pay cash, but then they end up not funding, not buying the house, and the seller wasted months not having the home marketed. It ends up not closing. It's a really bad thing. So in our market, it's common and customary for you to be able to show proof of funds. There's a couple ways you can do it. You can show your bank account statement, even if you want to black out the account numbers, or you can get what's called a proof of funds letter from your financial institution that says that they have verified that you have sufficient funds to purchase a home with a sales price of up to X. Please know that we're going to need that before we start touring properties and before we start making offers, right? That's something that I would want to handle as a realtor. So that's the fourth thing. Now, the fifth thing that I'd want every real estate agent to know, knowing what I know by being a lender, is just this. A mortgage pre-approval, when done correctly, does not take 5, 10, or 15 minutes. Those are called pre-quals. That's a pre-qualification. That's basically passing the sniff test. Yep, seems like this person's going to have a good chance of getting financing, but it's not a pre-approval. Most mortgage pre-approvals take 30 minutes to 3 days. And yes, I said 3 days. For those files that are paperwork intensive, for those files with many moving parts, which, by the way, John, that's my polite way of saying that's a hard-ass loan. That's my way of saying, ooh, that has a lot of potential to go sideways. It could take 3 days. 3 days because we have to collect so much data, have that data reviewed, analyzed, and maybe even get a second set of eyes to look at it to make sure that when we say you're good, we mean you're good. 30 minutes because it took me 30 minutes to go through the questionnaire, ask all the right questions, pull credit, throw a mock scenario together, and run it through automated underwriting. And it can take 30 minutes when John Coleman is a W-2 associate working as a content creator for lower, and he makes X salary. And his wife works for the Orlando Magic, and she makes X salary. And when I add his W-2 and her W-2, that's guaranteed income. And I pulled their credit, and all of their debts are on their credit. I asked him about his money. He told me he had X amount of dollars in his 401k and Y amount of dollars in his savings account. I ran it through automated underwriting. I maybe even used some technology to go out and verify his income, verify their assets, at which point it literally was easy peasy mac and cheesy. 1 out of 7 transactions are like that. The other 6 out of 7 come with varying degrees of hairiness, right? It could be John was previously married and John pays child support. Now I have to document that. It could be they only qualify if we use John's wife's child support that she receives from her child from her first marriage, at which point I have to be able to document that. It could be that John is not hourly and John is salary, and a lot of his income is coming from overtime or bonus, at which point I won't be able to move forward with the pre-approval until I document that. So I think if I was a real estate agent, knowing what I know, the fifth thing, because I said these are the 5 things I would teach you, the 5th thing is understanding that a pre-approval is way different than a pre-qual, and that pre-approvals take at a minimum 30 minutes. I would probably say an hour when done well, but at a minimum 30 minutes, and could take upwards of 3 days. So pushing for a letter, well, so-and-so gave me a letter. Well, here's what y'all need to understand. That letter is only as good as the information that was collected up front. We have a saying in the mortgage industry. It's called shit in, shit out, or garbage in, garbage out, or data integrity. I can give you a letter that says whatever you want, but that letter is only as good as the questions I asked up front and of the documentation I was provided by the borrower and the research that I did. So just because you have a letter or just because another lender provided a pre-approval, you have to consider the source at all times. And if that is a source that is not trusted, not experienced, or didn't put in the work, then that letter is basically a really good, in case of emergency, piece of toilet paper that you can use to wipe your rear end in case you have an accident while lost in the woods. Versus a true pre-approval, it's going to take collecting data. It's going to take asking the right questions, utilizing automated underwriting, utilizing your underwriting department, maybe even soliciting your processor to help you out with some verification of employment and verifications of income, and just be patient because you'd rather do the right job once versus have to keep going back and stumbling across yourself because you didn't do the proper work up front, if that makes any sense.
Passionate description, Dustin.
Passionate description. So those are the 5 things.
That's amazing.
Those are the 5 things. I'm sure we could make a part 2. And the part 2 could probably cover the next 5. But for this episode, these are the 5 things that you should know if you were to ever sell real estate, coach people on how to better sell real estate, or open your own real estate brokerage. This is coming from my 20 plus years experience as a mortgage lender.
Well said, Dustin.
Y'all, his name is John Coleman. He is my co-host and producer extraordinaire. My name is Dustin Owen, affectionately known as Dio by my friends. Our show is the Loan Officer Podcast. If you like what we're doing, do us a favor. Share us. Sharing is caring. Not once, not twice, but to 3 people. If you're tuning in on audio right now, make sure you go to the YouTube channel and subscribe. And if you're a loan originator and you're not receiving our newsletter, what are you waiting for? Go to our website, TLOPonline.com. Sign up for the newsletter. It is free to do. It's really good, and it comes out weekly. And then finally, if you're looking for business coaching or sales training and you're a mortgage sales professional, check out what we're doing at the TLOP coaching community. Dollar for dollar, bang for buck. It is the #1 way for you to invest in your product, which is yourself. That is all the time we have for you today, but we do look forward to catching you on our next episode. Peace.